Oh, what's going on, everybody? Welcome back to Ryan Makes Sense. Today we're looking at ticker symbol NL, that is NL Industries. This is a security and protection services industry. The stock is $8.05. Does it deserve to be this low or high? We're going to run my proprietary stock price calculation. We'll also do some advanced charting to see if we can find any patterns or I've done this one before. Any patterns or areas of resistance and support. Honestly, looking gorgeous what I've got here. Thanking my past self for this. So without further ado, let's go ahead and hit the subscribe button and jump on in. So again, we're on the monthly chart. We like to look at the bigger picture before drilling down. Our strength looks like it's with the bulls. Look at the last 6 months. A lot of good demand right here. The stock went from $4 to $8, so it's pretty hot. Momentum to the upside, money flow to the upside. Relative momentum indicator getting ready to get hot. So this is looking gorgeous so far. They're profitable. The price to earnings is a 6.75, but the forward price to earnings is a 9.3. We normally do not like that because it means that next year the company is forecasting to do worse than they did this year. Looking at the EPS this year, they did 1,584%, which is incredible. That might be very hard to top, and I understand. So both of these are absolutely fantastic. Quick ratio, absolutely amazing. No debt. Sales the past 5 years are positive. EPS past 5 years positive. So that just goes to show that they're resilient. They've did well through the COVID. Gross margins pretty high. That's fantastic. Uh, wow, very low float stock. A lot of shares. Not that many shares outstanding. Finviz says this is do not. This is a sell. They say this is a sell at the moment, but they also have it as a price earnings of a 6.75. So Finviz is giving us very different signals here. That is interesting. We'll run our calculation. Ooh, okay, I see something that I don't like. 2023 they did 161 million. 2022 166 million. 2024 the trailing 12 months they've only done 150 million. So revenues are decreasing, unfortunately. Shares outstanding is pretty flat overall, nothing to worry about. EPS going the wrong way, going down and out. So we'll take a look at that a little bit further. Let's take a peek at our calculation. So market cap, we only include if it's over a billion. This is a 380 million. Does not hit that threshold. Income, they're profitable, 58,270,000. Sales, they do 150,690,000. All right. Did I do that right? 208 million? Yeah, okay. Going on down. So we wanted to look at a few things. So Q1 this year, 37 million compared to 41. They missed out there by about 4 million. Q2, 35 million compared to 36 million. However, they did spend 1 point, maybe 2 million. No, like 1 point. They did spend a little bit less, so their gross profit actually grew there. So that's good for them. Q3, they did 33 million compared to 40 million. Huge difference. Gross profit 9 million compared to 12 million. So not good. Gross margin 28, 31, 25, 30, 31, 28, 30, 27. So really no concerns at all for gross margins. Net income. Profitability, I mean, Q1 6.87 compared to negative, that's huge. 7.8 positive compared to -3, that's huge. 36 compared to -0.07. So that is huge. And then their EPS, let's go annual. EPS, stop. 2023 was 0.13. I swear we were looking at negative, weren't we? Go back up. 2021, 2022, so 105, 69, -5. 109. Where's the disconnect here? EPS 0.13, 0.89. Oh, right here. Okay. So, um, we're looking actually really good. We're actually looking at a reversal. So now 2024 should be 1.19, which will actually be higher than this. So our EPS is going to get us back to pre-COVID levels, which is huge. So that is awesome. I think we could be at the precipice of something fantastic here. Um, Q4, let's see how their Q4s typically are. 160, oh, let's go back quarterly. Q4 2022 is 39 million. Q4 2023 is 43 million. So we need Q4 2024 to be 46 million. I don't know if they've ever had that high of revenue before. But if it follows this pattern, 39 to 43, you'd think it'd be about 45, 46. So if we do get to 46 million, that would put us, it would drop off because we're still short. That would put us about 153 million for 2024. And that is because we missed Q1 by 3-ish million, and then we missed Q3 by like 7 million. So yeah, 2025 is going to be a very big year for them. However, I saw we got a sneak peek at the chart, and I think we saw something that is fantastic. So we'll get there in a minute. Let's finish out my calculation. Sorry, we just got so sidetracked. Cash, they've got 175 million, which is a record for them, it looks like, going back to at least 2022. So good for them. 175,690,000. Okay, that's a lot for them. Debt, I thought it was like zero. Yeah, it's like 500,000. There's like nothing for them. Yep. Okay. Total assets 585 million. Total liabilities 180 million. No concerns there. Long-term debt has been very low for a while. Short-term debt, nothing. Inventory. Okay. Quick ratio. I mean, it's been solid. Like this company is very well positioned for an absolute monster breakout, but we want to make sure we get in precisely at the right time. So shares outstanding is 48,850,000. $7.80, 86-cent stock trading at $8.05. And they also give a dividend. So that is something we have to consider. They give away some of their cash, which is fine. Um, I'm really interested to see what institutions are doing here. So they own 1.88%. That's old data. New data shows that they own 13.39%. That is the most since December of 21. December of 21. Right here, December of 2021. The stock was $6. So so that's insane because institutions owned a lot more when the stock was $6 than they do now. So a lot of this ownership is probably coming from people like you and me finding this stock that's potentially undervalued. So that is a 1% to 13%. That's a huge jump in ownership. Um, I don't see any big 10% plus owners or 5% plus, but I'll bet you we have some Vanguards. Okay, I see Vanguard. So let's do a control F Vanguard. Okay, so Vanguard, BlackRock, yeah, so they all got Vanguard was 373,000 shares. BlackRock probably owns around 500,000, I'm guessing. 548,000, good guess. Thank you. Renaissance. They're always early. They're always so early. I don't see them here. Okay. Deutsche. Okay. So, very interesting overall. Very good business. Very good. The books are set up very well. Institutions are buying from 1% now 13% ownership. So this is huge. Ooh, look at this. We are in a triangle. I don't know when I charted this, but it is very relevant. This is absolutely, positively beautiful. Wow. So what we have here is it's a triangle. The stock, this is a very sloppily put channel. I wonder what time frame I charted this on, maybe like a weekly. But look, should I just restart this chart? Honestly, I think so. Just restart this. Okay. We're going to do this from scratch because I appreciate you guys for sure. Beautiful. It's time to play the game. Okay, so I mean, this has been a. Okay, so you can see I'm trying to find a support right here, and this is obviously the best support. However, you can see on the far right of my screen, like over in this area, it gets below zero. So that channel it's not really relevant anymore. We're gonna probably look like, oh, right. We saw that. Stop. Stop. Right. Right there is our freaking sweet spot. Okay. And then it's obviously not gonna go back. We'll go right there, there. Yeah. Yeah. Okay. So, and then now it's been trading in a Darvis box too, by the way, which is basically we literally can go um there. Yeah, to let's say there. Once the stock breaks above this, goodbye, hasta luego, adios. Like face, this could be a face melting run. So I'm gonna let's just move this actually really quick. I'm just gonna move it down here. So now what we have to look at is now the pattern of, you know how I look at the bigger picture. You guys can't really see bigger picture, and then whittling it down to like the micro movements, which is what I love, baby. Activate. Right there is where we want it. So the stock has broken above this resistance and it's sitting on it like a duck in a pond that people kayak in because it's a clean pond. Like, did we just find the entry? Did we just find the entry? Literally, it's sitting right on it. So if if we don't break through, we have our, it's going to trade sideways, honestly, probably until 2020 something, 2029. So right in this area as well, if you guys are familiar with the periods of panic, that's my best performing YouTube video. 2029 to 2032, we're going to see a melt up like we saw the dot-com bubble, the year 2021 after COVID, or I guess the pandemic, whatever. So we should see a major euphoric face melting run. This would be an absolute steal to have if the company does not issue any more shares. There's only 8 million shares float. I mean, this thing could literally, if someone comes in with $60 million, they could literally move this to the stratosphere. So let's plan for that. Let's plan an exit plan. Because this is something I would buy and just hold for a few years, in my opinion. So our first exit plan is gonna be not $15. Probably here. 23. Let's go to here to match up. So 23-ish. So that's sell target 1. But look at all this area right here. All this area is, there could probably be so many gaps that need to be filled. So next area is going to be 41. Then the next area is going to be, I mean, it's going to be here, obviously, 60. A lot of go to support and resistances throughout. Then likely again, right here, most likely 71. Okay. Then 102. So this could really, really, really get moving. Uh, my calculation shows that it's a little overvalued. I think if they have a bad earnings call, it could really impact the stock. But I mean, accumulating in this zone right here and then watching it go and explode would be so worth it. So, this is a potential 10 bagger in my opinion in the next 7 years. Is there a stock or a fund or ETF that would give you a 1000% return in 7 years? 1000%, not 100%, 1000%. From $8 to potentially 80 or 100. So, and it did not have a really good run in 2021. So it's got the spring and it's been literally consolidating for 2 decades going on 3. So this is exactly the 10 bag criteria I look for and I just get absolutely excited about. This is just gonna be next level. So yeah, 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 yeah. And they do pay a dividend. How regular are they paying the dividend? Looks like it's been constant since 2021. Did they do any special dividends? No, no special dividends, at least in 2023. So, yeah, cool. Okay, that's all I've got for you guys. I mean, this is a really well-positioned stock. I mean, no debt, $150 million to 170 million in revenue. They're profitable. They offer a dividend, which I'm not too fond of. I wish they would take this money and put it back in the business to improve themselves. I mean, they're already doing really well, but I feel like they could use this money to expand their marketing team. I don't know, sales team. So that's my stance. It's a very low float stock. I mean, this just has all the makings of a face melting run, in my opinion. Institutions own, okay, so they own 11%. I thought it was 1%, so it's 11% as old data, and then new data is 13%. So my bad. So it's still decent. And they had an amazing year in terms of EPS, which they did. Their EPS for 2024 is going to be 1.19, which is going to be the best they've had in, gosh, ever, maybe? Let's see. Annual. 1.19. Oh, 2017, they had a really good year for EPS. So they are potentially on their way back to stardom, fandom, whatever you want to call it. So that's all I've got for you guys. Let me know your thoughts. Consider subscribing, engage with my channel. Yeah. So have a great day. I will see you guys soon.